things actually sound like they're pretty good for your space right now. Just explain what the fundamentals are showing.
Yeah, so shopping centers are having like a quiet revival, if you could call it that. It's amazing. Vacancy rates are at all-time lows, and you're seeing new store openings outpacing closings, nearly 2-to-1. And what's happening is a lot of like retail 1.0 is being replaced with retail 2.0. So if you think about Red Lobster and like who's going to replace them, you've got, the Raising Cane's, which is a new concept doing quite well. You've got Chick-fil-A. You've got some of the, the In-N-Out Burger, if the Burger Wars, are all these quick service restaurants, and they've integrated a lot of drive-thrus to their business and the delivery as well.
Are the footprints the same, though? In other words, I think of a Red Lobster as a larger footprint than a Chick-fil-A.
Exactly right. So Red Lobster on average is right around 10,000 square feet, which is quite a large restaurant for today's, because most people grab and go today or do a drive-thru. And so what's happening is when you look at the Red Lobster real estate, it's in high demand, and you can actually take down the building and get 2 locations instead of the 1.
Yeah,
and the rents are at Kimco anyways, are so significantly below market that 1 replacement tenant will actually pay more than just the existing Red Lobster. So your second tenant's going to be all gravy on top of that.
Very interesting. Very interesting. What about those big, let's see, Bed Bath & Beyond? Who's going in there?
Yeah, that's another great case study. Again, for where we are in the supply and demand cycle, nothing new has been built for over a decade in retail. And so what you're seeing is the demand side really picking up and absorbing all that retail 1.0 space. So Bed Bath & Beyond is a great example of that. We've got a number of tenants that have replaced over 30 Bed Bath boxes at 40% higher rents than what Bed Bath was paying. And it's a combination of, if your favorite, TJ Maxx.
Is it TJ Maxx?
TJ Maxx, Marshalls, Home Goods, Sierra Trading Post, Burlington, Ross Dress for Less. You've got Planet Fitness in the gym space, to your point. They're doing new stores. Dick's Sporting Goods, and they have a great concept called House of Sport that they're rolling out. You've got grocery stores, the traditional grocery stores, the discount grocery stores, the specialty grocery stores. We were talking about Whole Foods earlier.
You've also got those medical, quick serve medical, I guess.
The urgent care facilities.
Yeah, urgent care. Yeah, that's what I
Pediatric urgent care.
Yep.
There's a lot of medical health and wellness is coming into the shopping center in a big way, and that's driving a lot of occupancy gains.
Would you see any? So if we say to you, okay, you actually probably have this amazing barometer of the entire consumer economy right now, and to your point, kind of the cost of direct to consumer, the past decade, the internet heavy approach, that's also now giving way to people realizing they need brick and mortar. Do you sense any signs of a pull down in some kinds of stores, a pullback in some kinds of shoppers? I mean, how would you just describe the spend, broadly speaking, right now?
So I think what you've seen in the inflationary environment, that inflation for retail is actually mother's milk if you're able to pass it on to the retailer, to the consumer. What's happened, I think, is in a lot of cases the lower demographic has felt the brunt of it, and you're seeing a lot of retrenching right now in retail. And so what's happened with Walmart and Target and a few others is they've squeezed the lower demographic to a point where they have to retrench. Whereas the middle to upper shopper, then that's really the Kimco focus, because we're first ring suburb, grocery anchored in the top 20 major metro markets. We haven't seen any patterns yet change. And actually traffic is up 4% year over year. So there's still that, that we supply essential goods and services, right? So you're going to the grocery store, and then you're typically either buying something else from a service provider, quick service restaurant, and we haven't seen that change in terms of there. So I think still the brunt of what's going on and the patterns are in the lower demographic.
Yeah.
Conor, always good to have you check in with us.
Great to see you.
Good to see you.